everybody, happy Wednesday. How you doing out there? You awake? Hey, this is a quick stock market update show. We call it the closing beat. We go over the stock market. We're doing things a little differently here today because it's a holiday shortened week, so we're joining it in the speakeasy here. This is our Thursday night set that we use for customers when we do what's called Wine and Wealth. It's a class we do every Thursday nights for customers, not tomorrow because it's Thanksgiving, but we do it every week for our clients to teach them something new, go over the markets, or help with questions that I find that people are getting stuck on. So I hope you'll keep us in mind at Jazz Wealth, and very, very, very thankful for all of you that have made the decision to come check us out or transfer your accounts over to Jazz Wealth. So super thankful for that, and of course I hope all of you have a wonderful and safe, happy Thanksgiving. All right, so no class tomorrow. That's our little, my little catch-up I got to give you there. We'll announce the Guess the Dow winner on Monday, of course, because the markets are open for a half a day on Friday. So we'll see what happens there. We'll, of course, cover that. Taking a look at the markets today, we got another positive day sitting at record highs. We'll go over to the charts here. You now have 22 days since the S&P got to these new record highs after floating around sideways over the summertime there. And basically 12 of them have hit new record highs. So out of the last 22 days, 12 of them, let's just call it half, have hit new record highs there. We are now 34 days where we have not seen a range of plus or minus 1%, meaning from high to low each day. We have not been outside of a plus or minus 1% range. We're just chugging along, man, hitting new highs here. You got low rates, you got a steady Fed, you got news out of Trump today that the, well, we're pretty much got all but signed phase one of the trade deal there. And so you got, there you go, low volatility here going into the holiday week, and you just have that general rule where you never short a dull market. That is the old traders rule that they follow there. I want to point out the Russell, if we could. The Russell hitting new 52-week highs today, really waking up this week, which we're really excited about. It is, here, let's just look at it. If we look at our fund on the charts here, I've got our small cap fund. You can go look at all of our portfolios right on our website there. This may have not updated just yet, actually. I might have a little bit of old data there. I don't think it's caught up. But you can see all of our funds and the performance on the website. The purple line is our fund. The red, sort of gold line there is the Russell 2000. So while we're performing a little bit better at the moment, man, it's just been quiet here. You've seen this chop back and forth, months and months of back and forth here. We actually slowed this fund down for a while, which is why you see this most recent sort of blast off here. If you were to look, this gold line was about to catch up and take off above it because we had slowed down our small cap fund. We sort of explain that to customers as we go. And so because of that next pullback in the Russell, we didn't pull back as much on our fund. That's why it looks like we're performing a little bit better there, to be fair. But if we zoom out, you can really see here just over this little time stretch here throughout the second part of the year, really sort of flat Russell 2000 wise. So we're happy to see it take off today. Very excited that the Russell's finally waking up there. If we go back to the S&P here for just a second, we now have year-to-date gains on the S&P of 25.8%. So if you take from the beginning of the year to the last day before Thanksgiving, which is always today, that's the best performing S&P since 2013. If you go back to 2013, year to date up to Thanksgiving, the performance was actually 26.72%. The issue there is you go, well, what happens after that? Like, what happens through the rest of the year? Is it positive? Is it negative? Well, I'm going to include that in our Notes from Jazz email that we have going out this week. I started doing emails for customers that can't spend the time watching videos, and I think I even sent it out to any of you that are on any email list that we have. I think it went out to you guys, but I was debating whether making that like a public thing or just sending it to customers. But anyways, we'll cover some more of those stats. But what I want you to know is if you look back every other time the stock market's had a 20+% start to the year, and at Thanksgiving we take that measurement performance from the beginning of the year till Thanksgiving. The biggest drop on record for the rest of the year was only minus 3.15%. You got to go back to 1980 to find that. So not a good sign for those of you that want a severe pullback before the end of the year. The largest drop on record between Thanksgiving and the end of the year when the markets have been this strong is actually 3.15%. So that's a tough one. We'll go over some of the averages and stuff in the email this weekend when we send that out. Okay, in other news, let's go back to the charts here. We'll make a quick adjustment over on our little handy dandy charts. We'll erase this guy. We'll put in jobless claims. So jobless claims, we covered this last week. Great spike there, breaking out of a little bit of a range. This is the 3-year. Let's go a little bit closer. Here's the 1-year chart. So we've been chopping kind of sideways inside of here. We broke out outside that range, and a lot of people thought, okay, well, that's not a good thing. It means initial jobless claims were going higher. We don't want them to go higher. We want them to stay lower. So there was a lot of concern that maybe that's the end of the low numbers there. There could be some concerns around employment going forward. Well, today's jobless numbers reverted almost all of that gain there. Big drop for the jobless claims there. Biggest weekly drop since May. You got to go all the way back to this decline right here to find the next largest week-over-week drop for jobless claims. What that tells you is people are, basically any economic concern about jobs and job growth or the ability to find jobs and things has sort of been squashed in the short term here. And so looking pretty good, jobless claims, if you happen to be following along. Let's go through our sector breakdown here. I'm sure you guys are out traveling, doing your thing for Thanksgiving, so it won't take too much of your time. Consumer discretionary, the sneaky little rally higher, back to these highs, doing well. We pointed this out the last couple of days. It sort of woke up, looking good there. Amazon helping out. Communication services hit new highs today. That's largely thanks to Facebook. Facebook had a good day today. The idea behind that, but here, let's just look at it. The idea behind Facebook's pop today was mostly Michael Bloomberg. He's going to spend record amounts of money to get his name out there, to hurry up and catch up as one of the Democratic favorites. And one of the biggest benefactors of those dollars being spent to advertise was predicted to be Facebook. And so because of that, Facebook looking to make a little bit more money, advertising revenues, and political season in general coming up there. So the communication services area doing well there. Nice new 52-week highs if you're following along. Speaking of 52-week highs, you got healthcare. Another 0.5% higher, just brutally strong. Healthcare, really strong. We've covered this a couple times. Part of the reason for that is you've got some underperforming areas of the market. You have people moving money out of that, big fund managers moving money out of that, putting it into performing areas so they can show good performance by the end of the year. Well, they're sort of forced to do that. So healthcare continuing its run higher. Retail bouncing off the 200-day moving average, hitting a bit of a ceiling here in the short term. It's the last known area where the retail stocks sold off rather aggressively, I might add, if you go back here to November 7th. And so for now, people look at that and go, well, we've had a good run. Why would I go and buy more, knowing that there's a little resistance there, a little ceiling? And so retail stocks actually taking a bit of a break today. Not too big of a deal. They've had a good run here recently. Tech hit new highs again. Most overvalued area of the market right now. Continues to chug along. Tech hitting new 52-week highs and new all-time highs actually as well. Real estate got a nice little pop over the last couple days. So this makes it tricky for trend traders here. If you're a technical trader, it's a little bit odd the way this is bouncing, but if you like REITs or you're in REITs and or you bought the pullback or something, you're happy to see this here. So a nice kind of recovery in a more, used to say, elephant getting into the bathtub, right? So this doesn't go higher because I mention it or someone mentions it and it's all of a sudden exciting. This makes a move, this sector makes a move because somebody is deciding to put some serious money behind it, at least in the last couple days. And it's very obvious by the candlesticks here over the last couple days. And we used to use the phrase, if an elephant stepped into a pool or a bathtub, you'd see the water rise. If we jump into a bathtub, maybe a little bit, but not that big of a deal. So that's the old saying there if you're looking to follow the big money. Financials hitting new 52-week highs as well, looking good, about a 0.5% gain on the day. Industrials was the only down sector today, down just a little bit on the day. That's largely going to be because of John Deere reporting their earnings, or Deere, and Boeing coming out there as well with some news. So that's about 10% of this XLI. So those two stocks having a little bit of a weight on the industrials today. Speaking of Deere, DE is the symbol. John Deere breaking down about 4.3% today. They reported earnings that were basically as expected. They missed on the last 6 earnings announcements. This one was basically as expected. So the idea here, though, is tariffs, right? The whole focus was on tariffs. The CEO is basically saying some of these lingering trade issues are causing farmers to not want to buy new equipment. And so they're expecting a decline in sales between 5 and 15%, just depending on whether it's industrial or farming related equipment. So not good there. Basically, they blamed it all on tariffs. And so if you look at the chart, that looks like it's headed back down towards the 200-day moving average, and a lot of volume there as well. So John Deere getting a little bit of a hit. Wanted to point out Amazon. I know some of you were looking for Amazon to bounce over the last few days. It's woken up, at least back to the 200-day moving average. 1.2% on the day. Looks like people are getting more interested in Amazon, at least here in the short term. So that's good news for those of you that are following along. Autodesk is another stock here. They reported earnings. We covered this 2 days ago to let you know Autodesk beats on earnings 86% of the time. They did report earnings and they beat on earnings, so they are following up through with their sort of assumption there. They did lower guidance, and that was briefly sort of an issue, but Autodesk came out very quickly and said, don't worry about us lowering guidance. We had some deals close earlier than expected, and so that's why we're lowering guidance. Not because we expect weakness, but because we're ahead of schedule, and so looking good there for Autodesk. I saw your Aurora Cannabis got a little bounce today as well, up 5.5%. The pot stocks, maybe just a little bit of bottom picking there, people trying to find an interest in those pot stocks after all the excitement last week. And so that's what you have as far as that goes. If we look back at the S&P 500, 73.4% of the stocks in the S&P 500 are above the 50-day moving average. That's a 2-week high, so that's good news there. If you like that sort of strength, if you've been hoping for a pullback like I think everybody watching, that's, you know, it's good news because you could sort of take the counter trend argument and say, well, that's an extreme, right? Maybe that's an extreme and we're ready to start pulling back. Who knows? We will, of course, probably find out next week if we're lucky. Okay, so 41 new 52-week highs today. You had 8 different sectors. That's good sort of breadth. That's good spread over the different sectors, making 52-week highs. Naturally, I'll point out a couple standouts. Autodesk, you know, blasting off today. That's good news. So that one stands out as one of the better performers, the best performer. Ameriprise in the financial space there, just continuing to break out over this little bit of a range there. Nice and strong and steady in the short term, up 1.5%. And Hilton Worldwide, we've talked about this a couple times when it first hit 52-week highs. It's been on a tear ever since then, so Hilton Worldwide doing well. Elsewhere in the 41 new 52-week highs, basically just steady gains. PCAR, transportation stock there, so trucker up 0.5% on the day. I just tried to spread out and talk about a few different things here. Ross Stores, a retailer in the discount space, doing good. And back to sort of financial / brokerage firms, asset management. You got T. Rowe Price there, about 0.75%. There were no 52-week lows today. There were 0 52-week lows on the list. So that's good news. I'll share some dividends with you and then maybe some Turkey Day stats because, you know, I like giving the stats, so we'll have to share some of that as well. Lockheed Martin paying out $2.40. That looks good. We own that stock. Goldman Sachs, $1.25. Own that one as well. McDonald's, $1.25. That's awesome. We own that one. Kellogg's, 57 cents. McKesson, 41 cents. HCA Group, 40 cents. Coca-Cola, 40 cents. All right, before I take your questions, yeah, let's do some Turkey Day stats, huh? Those of you that are paying attention today. We eat 704 million pounds of turkey. That is 44 million turkeys every year. Minnesota is the state that raises the most amount of turkeys. Basically, 2 in 10 of all turkeys come from Minnesota. I guess they like cold weather. I don't see many turkeys around here. The song Jingle Bells was actually, had a different name, but it was written by James Lord Pierpont in 1857, and he actually meant for that song to be Thanksgiving related. 2 years later, they changed it to be a Christmas song. Sarah Hale was the person that got President Lincoln to reinstate Thanksgiving as a national holiday. Previously, it was only celebrated in like the Northeast. That was kind of their thing. She was also the lady that wrote Mary Had a Little Lamb when she was 90 years old. She lived to be 90 years old, and she wrote Mary Had a Little Lamb when she was 90 there, so one of the popular sort of things that we use. Also, one that I thought was funny, in the first years of the Macy's Day Parade, you know those big floats that they walk down the streets with? They actually just used to let them go. They didn't plan on reusing them. They didn't deflate them. They just let go of the ropes and let it fly away until it popped. I thought that was kind of odd. That wouldn't fly today, man. There's my pun of the day. And interesting stat, the day after Thanksgiving is the busiest day of the year for plumbers. So if you're a plumber out there, rest up, get ready. I hope you make a lot of dough over Thanksgiving there. Enjoy. So just a few stats to share with you. If you have any questions, I will try to help you out there. Starbucks and McDonald's, yeah, very steady there, looking good. Dividends being paid out at McDonald's, $1.25, so that's good news as well. Amazon has been dragging. Thank God it has woken up. I mean, it's typically a pretty popular name that we like to look at, and they're typically in the news a little more. Maybe some pre-Black Friday, Cyber Monday, all that stuff, excitement there around Amazon. So I agree. Beyond Meat's poking up a little bit, 2%, still stuck within a range near the lows though. People, kind of hard to get excited about that there, but you know, we'll see. Maybe that is starting to turn the corner. I'll give you a hint. From a technical perspective, you always like to see a V-shaped bottom, not a U-shaped bottom. So if a stock is going to fall, you want to see it recover quickly. Just snap back and recover quickly. A U-shaped bottom takes a lot longer and is a lot harder to get a significant rally from that. And if you want to just quick lesson, the reason for that is think of all these people over the last 20 days or so that are thinking now, hey, if it bounces a little, I'll go ahead and sell and take my loss, or I'll take a tiny profit or whatever. Think about all these people. They've had to sit there and stare at that loss for a while. So as the stock starts to recover a little, the longer it takes to recover, the more antsy those people get to take their profits. So a little fun there with Beyond Meats. Ronald Reagan, first president to pardon a turkey. Yeah, it's a funny tradition, really. It's kind of odd because you know they don't really wait, they let the turkey go? Where's it go? Anybody ever ask where the turkey goes afterwards? You think they really pardon that thing? Yeah, I don't know. Oh, thanks for the compliment there on the, this is the speakeasy. We'll be back to normal on Monday, but I was doing some other things here, so I just left the camera and everything set up the way it is. Yep. You're expecting a sudden impulsive pullback or correction, at least 5% out of nowhere. You're getting ready and prepared. I hope you're right. I think it'd be very healthy for the markets to pull back. 5 to 10% would be very, very healthy and normal. I don't think anybody would freak out about that. I think it'd be just a brief moment of excitement. And I know a lot of people that are waiting for a pullback to get excited about. So I hope you're right. Yeah. Cool. You think, oh, what is the matter with this thing? I'm sorry it does that. I think there's more censorship or something on this. That's odd. YouTube's really cracking down lately. I think there's more cautious but contrarian approach to markets rather than a very extended and resilient market. Yeah, I agree. Very strong, slow and steady type markets there. Just melt up would be a good word to use. So that's it. When is it a bad thing to invest in stocks that give dividends? Well, look, if you could say there's a bad time, I mean, a lot of people just like collecting those dividends, don't necessarily care about what the stock does so much, as long as it's not crazy. I guess a bad time would be is if you caught a sector that was undervalued and just out of favor for a long period of time. A good example would be energy, right? That's a tough one to say, okay, let me go into energy and know that my stock is going to underperform or has been underperforming, but yet I get a tiny little dividend. That one might be kind of tough. Yeah. A 20% pullback would be fine with you. Yeah, that would be fine as well. No repeat of last year. Last year we got a 20% pullback, November, December, but yep, nothing so far this year. Is the Disney 1 million new subscribers legit? That's the rumor. I mean, that's just the headline that came out that helped the stock yesterday. I don't know. I have no way to verify if that's true or not. But good for them if it is. Yeah. Good for them if it is. Yeah, that's all I got. Yeah, I hope you guys have a great Thanksgiving. I would like to say I'm super thankful for all of you that do come join us for this show. It takes a lot of work to put this show together every day and everything else that we do. And the fact that you guys are interested, you like it, and we've sort of morphed into something that is helpful for you guys. I'm very thankful for that. I obviously have a lot to be thankful for this year. I hope you do too. And again, enjoy the rest of your long weekend here. We'll be back next Monday to start again. The markets are closed tomorrow, and it'll be a half a day on Friday, so just enjoy the day, Black Friday shopping. If for some reason it's a crazy day on Friday, maybe we'll sneak in here and do the show, but as of now, you look back over history, you just don't expect anything like that. So that's it. You guys enjoy your Thanksgiving. Thank you again for watching, and we'll see you guys on Monday. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.